Has Bitcoin really found its direction? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Click the link below and deposit $500 after completing KYC, and you'll receive a $1,000 worth of Ethereum position immediately. Click the link below, and you'll be taken to this webpage. After depositing $500 and completing KYC, you can choose to go long or short, and it will be open for you with a $1,000 worth of Ethereum position. Now, let's go back to the Bitcoin chart. Let's start with the daily chart. As you can see, the MACD indicator has not yet shown a golden cross below the baseline. If we want to go long, the minimum requirement is to have a bullish crossover, which has not yet appeared. Maybe after an oscillation and a pullback, we will have an opportunity. But for now, there is none. Moving on to the 4-hour chart, let's take a look at the direction of the converging symmetrical triangle we'll take. We've been following for a while. As you can see, okay, the price broke below this level here. You can see the breakthrough here. However, can we trust this breakthrough? Can we? Is it worth pursuing? There are two main things we need to consider. First, as we observed in the previous market movements, there have been false breakouts, false breakdowns, pattern failures, and so on. This position, too. The volume has shrunk and the price broke out the resistance. But it's back to square one now. We keep getting these false moves. So last week, we talked about whether or not we should enter at such price actions. We have to be cautious. The most important thing is to determine if it is a true breakout. The first thing to look at is the volume. If we compare the volume of the breakthrough here with that during the previous volume, like, for example, the volume of this bullish wave and the volume of the bullish pushback, the bearish volume of the breakthrough here isn't stronger. Therefore, the credibility of this breakthrough still needs confirmation. If you think it's confirmed that the price is really going down or going for a major drop, you might want to ponder it. Currently, there are two positions that I am concerned about. The first is the support level around 26,500 to 27,000 below. If this level is broken, or we have this kind of price action, the bulls will be in very dangerous territory. If it goes down a bit further to around 25,200 or 25,300, the bulls will have a very high risk. If we return to this level, it is very likely that there will not be another large-scale rally, because Wave 4 will not overlap with Wave 1. Therefore, if we return to the 25,200 to 25,300 level, where Wave 1 and Wave 4 overlap, we can confirm that this is not a 5-wave trend. Next, let's look at the repeated false breakthroughs. In this position, we can see that the resistance here was very effective before. After the price broke through, it was pushed back, confirming it was a false breakthrough. Then it went back and forth at this position. Ethereum also experienced a similar situation. This resistance was difficult to break through. You can see that there is resistance at this level. Resistance here and here. Another resistance here. The support became a resistance here. We have two fake breakouts at this resistance level. This is the first false breakout, and it returned afterward. And this is the second false breakout, which also returned afterward. So if we compare and analyze, we can see that Bitcoin and Ethereum have had similar false breakouts of important resistance levels. When did this happen last time? We need to go back to the daily chart and review the beginning of this bear market cycle. Let's take a look at the market at that time. I think it's worth considering as a reference because the price encountered strong resistance after a sharp rise, and we also had consecutive false breakouts. As you can see, the first false breakout at this level was followed by a drop, and then some oscillations. Eventually, there was a breakthrough after a trading volume reduction. However, it was confirmed to be a false breakout. In other words, it consecutively had two false breakouts at the same level in a very short period of time. You can find the first false breakout at this level, and the second at this level, which is very similar to our current situation. However, what is important is the sign before the crash, where the price fell straight down to 42,000 US dollars. I'm sure we all still remember vividly. Before the crash, we must have noticed that the bearish force was much stronger than the bullish force in the previous market trend. For example, as you can see here, the bearish force was clearly dominating the market. Look at the volume of the price drop here, here, and here. And when the bulls were fighting back, the trading volume was much smaller than the volume of the bear market. Obviously, the bears were dominating the market in this trend. Then, what happened later? I believe everyone knows very well. Let's take a look back. I remember when I was having a buffet lunch. The following situation happened. This lower shadow dropped to 42,000 at the position of 41,000 to 42,000. It was really terrifying. I still remember it very clearly. However, before this crash happened, we could clearly judge that the bears were more dominant and powerful. But if we look at the current market situation, hold on, it's a bit glitchy. Let's access it here. Back to the current market. We can see that the bears are not necessarily stronger. In the current segment of market movement, they are not more dominant. The bulls and the bears are evenly matched at most. The bulls may be slightly stronger. If we don't see the bears being more dominant, the probability of a crash happening next is relatively small. It's unlikely. We should pay close attention to the price action when it's approaching the support between 27,000 and 26,500. I won't simply open a short position in trend trading based on the current situation. What about Ethereum? Ethereum is slightly more dangerous. Why? Okay, if we consider ETH price movement a pattern, we can draw it like this. You can see that the contact points at the lower boundary, including this position, and the few points after that, I think they are all very effective. Look, the price has touched the line and produced a small rebound. If the price falls below here, it means that the entire structure above here has been broken. So, in my opinion, Ethereum is more dangerous than Bitcoin. At the moment, if it falls below, I will still carefully observe whether there is selling volume. After all, with this scale of formation, this length of time, and this degree of volume accumulation, if the price breaks below, it will definitely lead to a wave of market trends. Now, let's look at the situation with the CME that we talked about before. It is true that there was a gap in both the 4-hour and 1-hour charts, but most of the decline occurred on Monday. Then, it's no longer an issue. It happened after the opening of the CME. If we switch to the daily chart, we can see that the gap is gone. There was a gap on the 1-hour and 4-hour charts, but not on the daily chart. Therefore, from a perspective of trend and cycle, I'd pay more attention to the gaps on the daily chart, such as the one at this position, the one above, and the one at the 19,000 level. They are all visible on the daily chart. As for the gap we have now, it is only visible on the 1-hour and 4-hour charts, but not on the daily chart. So, this point must also be taken into consideration. Alright, thank you. You're welcome. To like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.